Since 2016, Caleb and Brown has processed over $5.2 billion in digital asset volume, offering access to more than 250 asset and providing one-to-one brokerage support globally. Before we begin, have to preface, not financial advice. This is not a sponsored interview, but Jim from Caleb and Brown reached out via the DMs and we put this together, and I'm super excited to dive deep into the weeds with all things crypto brokerage. So Jim, I'll start out here with a low-hanging fruit question, and you can give an intro of yourself within this too, please. But what is a crypto brokerage for people that aren't aware? And thanks for joining today.
Yeah, thanks for having me on. And it's a great question because it is quite a unique service offering that we provide at Caleb & Brown. A crypto brokerage is very similar to how you think of a stockbroker back in the past. So everyone that works at Caleb & Brown gets their own dedicated broker. So our clients have a direct resource that they can go to that can help assist them about their particular crypto portfolio, help educate them, help them stay informed in what's happening in the market day to day, because there's just so much that happens and there's so much activity. So we really emphasize a personalized white glove service, which you don't necessarily get on exchanges. As great as they are, customer support is probably not one of their strong suits. And so for us, we've always just prioritized having a direct resource for our clients to speak to and actually help them throughout their crypto journey. It's something that I wish I had when I started in crypto back in 2017. And as a bit of a background around me, just someone that's super passionate about crypto. And that's one of the best things about Caleb & Brown. Everyone that works here is very passionate about this space, understands it. And so our brokers are sort of like that expert opinion that clients can speak to and lean on when it comes to deciding on what assets to buy and again, a better understanding of what's happening in the market. I can't seem to hear you.
I always do this, dude. I have done 1,000 of these, and I just did this like a week ago too. You can't imagine how many times I mute my microphone. I think it's one of those really important things, though. Like for sure, like if we talk about like mass adoption of blockchain and distributed ledger, and yet like we expect like our aunts, uncles, and grandparents to like be getting on to like Binance and like looking for the next one. It's like that's never going to happen. So I wonder, like, I guess a question that I have just out of curiosity's sake, as over the years, have your interactions kind of changed from like, does it feel like people were more educated a little bit on blockchain and distributed ledger, or at least Bitcoin, things like that? Or is it, are you still going in at like square one with people and basically explaining like the very, very basics some of the time?
A lot of the time we are still going from square one. And as you can imagine, you mentioned it, a lot of our demographic, especially early days, was older generation. Certainly people know about crypto now. So back in 2021, 2022, people had no idea about this asset class. Maybe a friend told them about Caleb & Brown, and so they decided to reach out. But we're talking absolutely no understanding. I think now we're a bit more mainstream than what we were in the past. So people have a general understanding, but I think also their expectations and goals based on what they've heard in media are also a little skewed. So people think it's a bit of a get quick rich scheme, where obviously in some instances it can be, depending on the asset, but certainly for most valued investors and ones that have done well over time, it's about being smart about what you're investing in, understanding what's happening at a macro level. So I think there's a general better understanding of the cryptocurrency asset class. And a lot of our clients have become more knowledgeable through working with us, through using great products like Genfinity and others in the market. But there's no doubt that we still have a lot of people that are brand new to this space. And with that comes certain risks, especially if you're using an exchange platform for the first time. And it is still very hard to use. Like I think we sometimes forget that as people that have been in this space. If you're using the exchange for the first time, there's a lot going on. And it's quite difficult to understand. And so then if you think of someone that's more high net worth that wants to put a large sum of money in, all of a sudden there's more risk associated with that. There's a level of uncertainty. And so for us, it's about onboarding as many people as we can to this great asset class. And a lot of people want that hands-on experience. So they do so with Caleb & Brown.
Yeah, I think I'll move on from this here in a second, but I think, there's not enough to be said about the ability to reach out to somebody. When I was doing some research into this for this interview, I noticed kind of like 24/7 helpline. And I just imagine somebody going going onto like a normal exchange or like onto a DEX or something, like anything really in crypto right now. And then being like, oh, I think I made a mistake. And like there just being like zero lifelines anywhere. Like it even gets to the point where like you'll hear like, I was on a Twitter space yesterday, and you have people come up and they're awesome, and they're kind of like a town hall event and people can ask questions, but some of the questions that you get are like just very, very simple questions that, I know in that Twitter space people are answering them, but it's such an important thing, just the ability to outreach and get that kind of one-to-one help. I'm seeing here, $5.2 billion in volume, 250 plus assets offered. You guys have been around since 2016, over 60 employees. After processing that much volume in digital assets, are you guys seeing any patterns in how serious investors or serious participants are approaching the digital asset space?
Yeah, as you can imagine, it's probably very market dependent. So what our investors are doing now is very different to what they were doing before, say, the October crash of last year or back in 2021. We are certainly starting to see a bit more concentration, especially over the last, I would say, 3 or 4 months, as the market has been a bit more of a downturn. There is just such a big difference between investing in crypto today, as I'm sure people are aware, than back in 2021 or even a bit earlier than that, where there was a bit more concentration in certain assets, whereas today there are so many different assets to invest in. There are, I think, over 20,000, or there were, new tokens being created every day, right? So there's a lot more noise out there, which means there's also a lot of new interesting use cases, but it also means that there's a lot more option to, I guess, invest in things that decrease in value quite quickly. So we are starting to see a bit more concentration in majors, or more of just a pivot towards projects and businesses that are actually generating cash flow throughout their protocol or whatever use case they're providing to the market. And certainly that comes with a level of sophistication. But then we also just see people trying to continue investing in trends. So, we saw meme coins have its run last year. AI agents was the flavor of the month for a little bit. So people are still trying to find those trends. And usually that's not the best way to invest because it's quite short-lived. But yeah, we're starting to see a bit more concentration in majors, but that's also due to what we're seeing in the market right now and probably the level of uncertainty we're feeling. So yeah, there's some of the trends we're noticing.
Yeah, I think so. 2020 or 2021, I remember, I want to say 12,000. You could go to like CoinMarketCap and there was probably, I think there was 12,000 assets on there. And I went, this wasn't even this year. I think it was late 2024, early 2025. And it was like 20 million. And I was just like thinking in my head, like I used to like go through each page of CoinMarketCap and like filter by 100 and then like look at volume and then try to do fundamental analysis and all that stuff. And now it's just like, it's very difficult. And as you mentioned, I think, which is a good point, trends are fine, but it's like once I think a lot of people, once they see a trend on social media, that trend allocation, has already been allocated, to wherever. So I'll ask, one thing that I think is an interesting question for you, and you have, maybe some insight here. 2026 market reality. What's your take on the macro environment? I think this has been a very, at least from my standpoint, this has been a very weird past 12 to 18 months where it seems like there's been more, there has been more real world adoption of blockchain and digital assets literally on a daily basis than we've ever had. And yet here we are in 2026. This time wasn't different. And what's your kind of take on like the broader?
Yeah, I mean, overall, very like from a fundamental perspective, you said, I don't think it's ever been a better time to be either in the crypto industry or passionate about it or an investor, purely from what we're seeing at an adoption level from a federal US government level. So what we're seeing from legislation being passed, a general focus on crypto, whereas, it was maybe just less than a year ago where the current the past administration was very anti-crypto, and the SEC was coming after some of the largest businesses. So we've seen a lot of advancement we're shifted from a very negative anti-crypto viewpoint from a government perspective to now a very positive one. Hopefully we get the Clarity Act passed here pretty soon, which would be really, I think, a benefit for everyone in the crypto industry. We're starting to see governments hold crypto on their balance sheets now. Like, this is stuff that we wouldn't have envisioned, less than 2-3 years ago. So I think from a fundamental perspective, we're at a very positive point, and it certainly doesn't feel like the bear markets of the past where we saw some of the major players like FTX, Celsius go under, which pulled a lot of liquidity out of the market, but also sentiment that this space wasn't a long-term serious financial industry. So from that perspective, I think things are going really well. We're still very much just a byproduct of the uncertainty and fear that everyone is experiencing currently within the market. And one difference that I think does definitely hurt this industry is just how much easier it is to put large leveraged plays and positions on, which means that when we do get volatility, which, look, this is the crypto industry, we're always going to have volatility, at least in this time period. But it means that on the downward end, there's cascading sell effects because of the ability now for me to go on hyperliquid and put on 100 times leverage position on. And for not just retail, for large institutions to do that, which means that the market can move quite quickly, which again can lead to people selling their positions thinking that there's something wrong when not really anything has changed. It's more so just that a lot of leverage has been flushed out. So I think we're just seeing a lot more volatility, and that's then spurred on by what we're seeing from, in the equity market. There's a lot of uncertainty around AI and how that's going to impact jobs. And we haven't really had the quantitative easing that we've had in the past in 2021 that's allowed for further liquidity into the market. So we're in this kind of weird feeling right now where it feels like a bear market, but if you look objectively at what's happening in the space, it doesn't feel like that either. So yeah, it's an odd time. Hopefully, I still think there's some bullish times ahead, but whether we get a full flush out into a bear, that could also happen. It's hard to really predict where we're at right now.
Yeah, I remember in 2021, the market top was Elon Musk going on to Saturday Night Live, and everybody thought he was going to talk about Doge on Saturday Night Live. This market cycle top was Larry Fink's like Larry Fink from BlackRock being like, everything's going to be tokenized, and people are like, that is horribly bearish. We're totally done.
What I thought the launch of Trump Cone and Melania was probably the top signal for me. I should have known.
Hey, you know what? It probably was, to be honest. Like, if you go back to, I think that was that November of 2024, or was that early January 20? That was like right around
before his around that time.
Oh my gosh, this space is nuts. So I think one thing that might be interesting too is like, for people that have been with you guys for a number of years, have you seen a difference in mindset for how they approach this space compared to the new entrants? Meaning like maturity, things like that. Like, sometimes I think to myself, I'm like, man, back in 2016, if I would have just held like Bitcoin, Ethereum, and maybe a little bit of XRP or something, like, and just not done anything, I probably would have, maybe I would be in a better position than I am now. But I think that everybody changes as far as how they mature with this space. And I'm curious if you guys see something similar to that.
Yeah, definitely. I mean, as you mentioned, like, we've got a lot of clients that have been with us since 2018, right? And a lot of them back then were novices to crypto. They've now experienced the highs of 2021. And a lot of the time we do try and encourage to try and take profits as we go. I'm sure you're someone, and I can speak to this, that I've round tripped through cycles before. And learning from that is probably the best lesson you can get from it, just because okay, well, hopefully if this ever comes back around again, I know to actually take some profits. Now, certainly a lot of our clients are far more sophisticated, especially I'd say the high net worth ones, about understanding when, look, there's just volatility that's going to occur in the market, and I either treat that as a great buy opportunity, or I just hold on the assets they already have conviction in. So, certainly ones that held Bitcoin, Ethereum used to be more like this. I think it trades more volatile today than it did in the past. But even an XRP is an example. Like, we have some clients that bought it a year and a half, 2 years ago when it was around 40 cents, and then it had that really big run up. A lot of them have just had high conviction in those assets, and they've either added into their positions when we've had downtime in the market, or they've just held throughout the volatility. And so I think that's something that a lot of our clients have learned over the journey is that a lot of the time it's actually valuable to hold through the volatility or add to your position. But I think also a lot of them have taken profits when it's made sense for them to do so. So when they're up 5 times, 6 times, I'm sorry, that's just a great investment result. I don't care who you are. So for a lot of them, it's been having that understanding of knowing when to take some profits. Maybe not sell out of your entire position, but make sure that you're actually cashing in when it makes sense to do so. So I think that's a level of maturity that a lot of our older stage clients have had. And a lot of them have worked with their broker for 4, 5, 6 years. Our CCO, Jake, we're in Fort Lauderdale right now, just caught up with a client that's been with us since 2017. So he's been with us for that really long period of time. And they've built not only a great professional relationship, but even an amazing personal one where they catch up, speak about the markets, and they've just become super sophisticated about this space through that journey.
Yeah, I say some similar stuff when I do like the personal videos. I mean, because I believe this, because I like fundamentally believe it doesn't matter what's going on in the blockchain and digital assets markets. You can look at it as, oh my God, I'm going to freak out, or you can plan and look at things as an opportunity. So when, Bitcoin goes down, or in the markets go down, I should say, you can look at it as an opportunity. When it goes up the same way, I think it is. You say something really valuable too, which is like, if you're getting a 500% or 600% return on something
take that.
We still see
we get greedy.
I see people like angry, like, okay, so like I know for a fact, like there's been people that like will comment, and I'll talk about XRP or any of these things, and they'll be like, XRP hasn't done anything, and I'm like, dude, it has went up from like 14 cents in the past 5 years or 6 years to whatever it went to, and it's like, that doesn't happen in any traditional asset class outside of like blockchain digital assets. I mean, to put into context, one stat I always love is like all of crypto combined is sitting under an individual company, which I think is probably still NVIDIA. So NVIDIA has a larger market cap than all of crypto combined. And yet all of crypto is going to be pretty much, all these real world assets are going to be sitting on top of, some of these networks out of the 20 million. Not 20 million, but a lot less. I would love your take too on just kind of where we're heading for the future, what you're excited about for Caleb and Brown, kind of the wider markets, any shifts you expect. And I know we kind of talked about where the market's at now, but maybe your broad thought process on where the adoption is going to happen with this technology and what's going to happen.
Yeah, so I'll start from a Caleb and Brown perspective. We've been incredibly busy. We're always quite busy during periods of volatility. Obviously, it's a better time when the markets are doing well, both from a personal perspective, but also working with our clients. But we have a lot that are being quite savvy. And I love that point you made around having a plan. And I think that's something we've tried to emphasize with our clients around having a plan set up. So whether that's a profit-taking strategy, whether that's an ability to enter the market again at a certain price point, we always help our clients with that. And so we've been very busy on our end with that. And as I said, we've had a lot of sophisticated investors that maybe didn't hold as much Bitcoin as an example as they wish they had, and are viewing this as a really great opportunity to add to their position. And so for us, we're based, as you can tell by my accent, our headquarters is in Australia, but we have an office presence here within Florida. And a lot of our focus is more around how do we provide this personalized service, but give it in a more face-to-face nature, have more of an opportunity to run more events and meet our clients and partners face-to-face. So that's something that we're very much focused on. And look, we're headquartered in Australia, but 74% of our client base is US-based. So we're very much a US business. And we operate in all states within the US except New York, which we hope to get our BIT license for in the short term. So look, for us, we're focused on continuing to provide an amazing service, providing an ability for people to onboard safely into crypto. And look, we talk about trends. This is not necessarily market related, but we're seeing a lot more of an increase in sophisticated scams. We have a lot of new people that come to us and have either been scammed or are consistently getting a lot of outbound from people pretending to be someone else or pretending to be from one of the exchanges and asking them for their private keys or what have you. So for us, it becomes more imperative to have proper controls in place and security, and to continue to educate people that are new to this space. Because, hey, look, there's nothing worse than someone that's new to crypto and they get scammed and it completely sets them off, and we lose them forever to this industry. So we're focused on continuing to provide a great service and continuing to innovate. We're really a spot exchange, a spot platform at this stage. But a lot of our clients want yield products. They want the ability to loan and borrow against their assets. So for us, it's about building products that are great commercially for our clients, but are actually still safe and uphold those values around security. So that's what we're focused on in 2026. In terms of the market, look, I'm always probably naively optimistic. I do think that we have an ability to still have a great 2026 from a price performance perspective. I do think a lot needs to go right, though, at a macro level. So I still think we need to see more certainty around the geopolitical tensions that we've seen become quite present over the last 6 months. I think we need a bit of a stabilization from that end, because naturally crypto is the first asset to get sold off at any level of uncertainty. So I do think we need to see that. But I am quite bullish that hopefully we do get the Clarity Act passed here soon, that I think will provide a bit more of an understanding of where the US sees this industry going long term. Hopefully it's not pro-bank like we've seen in some of those amendments. I do think yield generation, as an example on stablecoins, is something that we must have, because I think around the average retail investor, are they going to hold their assets just in their bank account and get the deposit rate on that? Or they should have the competitive nature of holding stablecoins on a platform and being able to earn yield that way. So I think Clarity Act, if that gets passed, will be great. I think the new Fed chair, it sounds like he's pretty interested in reducing interest rates, which should create a further liquidity expansion in the market. If we get certain catalysts like that, I do actually see an avenue for further price improvements in 2026, at least from where we're at today. And certainly, look, if you look at the stablecoin float metrics on chain, there are a lot of people that are holding stablecoins right now that aren't entering into the market. And so that tells me that there is an appetite at some point to enter back in, if we start to see sort of a more favorable, I guess, expansionary environment in the economy. So I'm relatively optimistic. I know that a lot of our clients are, but look, there is a lot of uncertainty. If we do, and I don't know if you still or do believe in the 4-year cycle, if you do believe in that, it's probably looking like it'll be a downturn year. But I still think, as we mentioned before, there's so much going on that is positive in this market, and that I'm ultimately a big believer in Trump wanting to prop up not only the crypto market, but the share market in general, and wanting to keep things in an expansionary phase of things. So I do think he'll do everything he can to boost and prop up this market. But then again, he could announce tariffs and it changes overnight. So there is just uncertainty and volatility, but that's sort of my position. But what's your take on it all?
Oh my. Like I said, I think that, so I've been kind of a believer in the 4-year cycle until it is broken.
Yeah.
Because I think, this is just my personal opinion, I think at some point it's broken. I think that at some point, and this is my personal opinion, this is not the opinion of Genfinity. At some point, I think that it is definitely possible that even like something like Bitcoin gets usurped with something else. I mean, otherwise, like Betamax, VHS, DVD, like things continuously, like, kind of evolve. Maybe that's, a really romanticized, like from a utility standpoint, like viewpoint, but that's kind of my belief. However, I do believe in the 4-year cycle because it has happened. Like I literally, so like on the personal front, I like did a, back in 2021, I was like, I would rather not get caught with my pants down. I wonder if I do like a study on like the halving and percent drawdowns and some of the moving average crosses and stuff like that, if I could potentially figure out like timing wise for when, maybe tops or whatever happened. And I literally had like the time frame on a trading view that was like 11 or 12 months since the halving, or 17 to 18 months after the halving for potential like double top of the market. And they pretty much came to fruition again. Interesting to me is that like last year there were so many people that I was seeing saying exactly what I say all the time, which is it feels different this time. But It obviously wasn't. So like the feelings don't really matter. My gut feeling, and I say this all the time, I fundamentally believe that like blockchain and distributed ledger at some point is going to be a part of our everyday lives and almost everything that we do, because I look at it as kind of just the next iteration of the internet. It's like the internet, but then add value into it. So yeah, I mean, I think that this space is, I think that the big enterprises and institutions are here 1000%. And I think that they have and will continue to like fortify positions in this space. This is again my personal opinion. And when they decide to let it go up, like it'll probably go up, but then the macro stuff plays in as well, like you mentioned. So
yeah,
I'm
sorry to cut you off.
I just think like I said, like on a daily basis, there is at least 4 or 5, 6 pieces of news that come out that back in 2017 or 18 would have literally been a narrative for a 6-month time frame, and we're getting that 4 or 5 times a day now. So like adoption is here. A lot of the stuff that we were speculating on for where this technology is going is 1000% real. Yes, the majority of it is still speculative, just as any new technology is. But there is a lot. I think there's a lot of opportunity in crypto, and I would not rather be in any other space or industry. Is kind of my take on it.
Absolutely, yeah, and I agree with that. I'm also optimistic in the respect of we're just going to get more useful use cases that come out of crypto. So I think, if I think about all the clear winners, obviously blockchain and the underlying technology, I think is here to stay. As you mentioned, we're even starting to see the largest banks and businesses around the world start to use blockchain in their everyday functions as a business. Something that I'm hopeful for is that we just get more clear use cases. So I think stablecoins are a clear use case, going to be used by businesses around the world, allows for easier flow of commerce, a lot cheaper as well. I think DeFi, and obviously that's a use case that's been around for a while now. I think that has clear market power and product market fit and will be staying. I also think tokenization, as you mentioned, and real world asset tokenization. Yes, we've had some projects that are doing that. I don't think we're at a level where that's been adopted at a grand scale. And so I think they're sort of the main 3 that I'm very bullish on and think will be around in, say, 5 to 10 years from now. Now, someone could argue maybe prediction markets, that's kind of like the new fad and thing. I don't know how valuable or value add-in that is to this space, but I want to see more use cases come from crypto as a whole, and I think we'll get that. But I think there's 3 clear ones that will definitely interrupt what's currently happening within the current financial system and will be used by large institutions moving forward. I'm just hopeful and hopefully they'll exist in the future, new use cases that will appear that make sense and leverage blockchain technology and allow for a greater efficiency in how we do finance globally. So yeah, that's something I'm looking out for and hopefully we get more of. But you only really get that if there are more devs coming into this space. There's more adoption from, say the everyday person today that ends up building something 5 years from now that is amazing for the space. So they're the main 3 today, but hopefully we start to see more of those use cases appear.
So what's interesting is that like, interviewing like the kind of like the middleware providers, which are like, the big 4. And I've interviewed like PwC and Deloitte and Boston Consulting Group and like these just behemoth professional firms. And the use cases, I mean, some of the use cases I'm interested in, which I think have a lot of like potential because they're actually happening, are like very non-sexy like use cases, like product track and trace and supply chain. We've been talking about that for years. And I think that a lot of people don't realize like the world still runs on like very medieval laws for, documentation. Like, so like an example of that in supply chain is a lot of jurisdictions still have hand signed bill of ladings, which is like the late 1800s. And the UK just adopted digital documentation a couple of years ago. But like you have these kind of big use cases, like trade finance is like 3 to 7 trillion. Like these big use cases, what I think is, and you mentioned AI earlier and like the agentic stuff. I think that ties in with crypto adoption mainly because it quickens the pace at which institutions can deploy prototypes and try out solutions to solve real problems. And it's weird because like the institutions themselves aren't the ones innovating with this stuff. It is like the boots on the ground, grassroots builders that are like just trying to break stuff, trying to launch stuff and trying to break stuff. And that's what happened with DeFi. Make no mistake about it. Like the people in crypto started the DeFi movement, and now you're seeing the BlackRocks and Franklin Templetons of the world leveraging it, which, you know, it's kind of a give and take. But yeah, I'm excited about I kind of go back to too. I think that there's a huge tie-in with AI that we really don't even see yet, because I think AI is so impactful on society. 99% of people in society don't realize when they type something into ChatGPT, there was inputs that went into the way ChatGPT answers you that could be changing the way that you, maybe changing the way you think about things, whatever. I think that the ability to like prove out the data that goes into these LLMs for AI is going to be like massively important for these platforms. There's like no regulation around AI. Like fundamentally, I think that the best things that blockchain and distributed ledger are for still is like transparency, auditability. My wife hates this word, but I'll say it. Provenance. She hates that word. But yeah, I think it's exciting. I want to mention real quick before I let you go, because you brought up a couple of things like maybe 5 minutes ago about the security aspects in Web3. I saw a post yesterday on this because this happened to me like twice. A lot of people that do think that they're doing the right thing from a safety standpoint, like they'll try to self-custody and use Ledger and stuff. And I definitely recommend self-custody, but you really have to be careful. Even like there's fake, you know, pieces of mail that come to you now. They're like, hey, scan this barcode if you know, it has your first name, last name. It's like you bought a Ledger. And when it comes to your house, it becomes very real because it's like, okay, it's coming through the mail. It must be real. But they're total scams. Like you scan a barcode and then you enter in your criteria, your details, and you get hacked. So I think that safety is massive. And I also am a realist. So I don't think when we get to mass adoption, every single person is going to be like storing a seed phrase on a piece of paper under their bed, like crossing their fingers and being like, I hope it doesn't.
And a lot of people don't want the stress of doing that as well, because it is quite stressful. And yeah, so I definitely agree with that. And I think that's probably one of the biggest concerns in this space that we still need to solve. And that's the reason we've provided an institutional grade cold storage custody solution for clients that just don't want to deal with that. We're exactly the same. We encourage self-custody. You know, I can speak from experience. I have my own hardware wallet, but I think it's important to have diversity in custody solutions available for clients, because not every person is going to want to hold their entire net worth on a little ledger that's stored in their house. And we've even had examples of clients over the years that did everything right and they still lost their money. So as an example, we had a client that was based in LA. Unfortunately, their house burnt down in the fire, so they lost their hardware wallet. They kept the keys in a vaulted bank. Unfortunately, the bank also burnt down, so they ended up losing those assets. So nothing is ever 100%, risk free. But certainly, I think having the optionality of different solutions is good for people, and that's what we try and do on our end. But yeah, you're exactly right. I don't think mass adoption will ever be people holding hardware wallets themselves. And I think a lot of people use them, but don't actually understand how to practice have best practices for their hardware wallet and custody solutions. So it is something that is still very much a challenge for most people. And I think there's a level of uncertainty for a lot of people getting started in crypto because of it. So it's certainly a challenge that we're trying to help solve and at least provide an option for clients as well. Because look, you mentioned the sophistication. I get calls every week, and it's someone that is pretending to be at Ledger with a British accent, which is very trustworthy, and saying, hey, your Ledger's been compromised. I'm just here to help and support you. Now, immediately I know that that's a scam. But even when I first initially pick up the phone, I go, oh, have I been compromised? Like you, and I'm someone that's been in crypto for a really long period of time. So it does fool a lot of people. And so there is a level of sophistication that is quite worrying, and it works. Like if you look at the data on how many people are scammed each year and how much money is in that fraudulent business, it's quite a lot. So we've still got a ways to go when it comes to that side of things.
No, I think it's just common sense too. I mean, as far as making sure that you have a diversity of ways that you're safeguarding yourself. Like I had a ledger, like 4 or 5 years ago, something like that. I had like the first ledger that they released. And then I went and tried to like, look at my account and stuff, and like the digital aspects of it like broke. So like so I had to like actually order a different ledger, get it, and then repopulate everything and everything else. But I can't imagine the double house burning down thing. I want to mention,
unlucky.
That's horrible. So I want to mention to anybody watching this, you can go to genfinity.io and check out all of the content we have there. This interview will also populate on here. As Jim mentioned earlier, the Clarity Act, we have lots of stuff on regulation as well. And I had this up earlier, I forgot to mention it, but you guys do a great kind of monthly markets recap, and they're very succinct too. I think that's, and I mentioned it to you before that. I say that as a positive, because sometimes you get into like these reports and I feel like it's just like the people who are creating these reports for the industry, I feel like have to justify the costs, or they're like, let's put 130 pages worth of graphics on here. But this is 7 pages. This is every month. So you guys can check out Caleb and Brown's Inside the Markets. Go to calebandbrown.com if you want to learn more, and give these guys a follow at Caleb and Brown on X. I want to reiterate, this discussion was for informational purposes only, not financial advice. Certainly you do not want financial advice from me. And it was not sponsored, just doing this because Jim reached out, and happy to do an interview here. Please do your own research. And Jim, hang out with me for a second. Let's make sure we get this recording, and don't be a stranger. If the markets turn around again, it'd be cool to like come back and like not be.
Absolutely.
Yeah. Because I feel like I'm like doom and gloomy half the time. It's like, what are your feelings? And it's like, come on. Thank you, Jim.
I have to say, for what is being termed as a bear market, it's pretty positive. Like we're pretty positive internally. Our clients are as well. Obviously, it'd be nicer if our assets were doing a bit better. It's sometimes tough to look at the portfolio and see how it's performing today. But I do think that sentiment around it being a bit different this time certainly feels that way. Now, it could always get worse without sounding too pessimistic, but I think we are still in a great spot. So yeah, no, look, absolutely. Thank you so much for having me on. It's been great to chat. And as I mentioned to you when I reached out, we've had a lot of our clients mention Genfinity, mention your personal YouTube channel. So I think there's a lot of overlap, and we're all about just helping educate our clients and inform them about what's going on in the market. And it's clear that's exactly what you're doing on your end as well. So thanks for having me on. And yeah, hopefully we can connect again when the market's performing a bit better.
Thanks, Jim.
Thanks.